What's up, everybody? I am Jaspreet Singh, and last Friday, NPR interviewed a former Fed official, and they were talking about how the Fed made a big mistake when it came to inflation. Essentially, what he said was the Fed acted too little, too late when it came to inflation, which is why we're facing this inflation and economic mess that we're facing right now. Then, later that same day, the chief economist at Apollo Global Management, this is last Friday, said that saving rates in the United States are dropping and our economy is having this kind of lag time. Like the Fed keeps saying that our economy is so strong, that everything is looking good, our labor market is strong. However, this chief economist said that the reason why our economy is still strong right now is because there's a lag time between what's going on with our savings rates right now and where our savings are actually heading. And then the Federal Reserve Bank also, it's a crazy week last week. I was in LA, so I wasn't able to record videos daily. So I'm trying to catch up on all that. But last week also, the Fed did a stress test of a number of banks, big banks in the United States, about just seeing if they would be ready and able to handle a recession. So what I want to do today is I want to go over first what the Federal Reserve Bank is saying, what their predictions are now, because they said a lot of things last week. Then I want to get into gas prices and the gas market, because President Biden made a number of changes in that area. And then I want to talk about the broader economy. So make sure you watch this video until the end, because I'm going to go over things that you need to be aware of as well towards the end. So if we start with what the Federal Reserve Bank is saying, the Fed essentially said that a soft landing is going to be now very challenging. So if you're not familiar with that terminology, let's back up just a little bit, because if we go back in time about a year ago, there was no risks or no concerns on the Fed part of a recession, and there was no concerns on the Fed part of inflation. What they said then 1 year ago was inflation is transitory. This high inflation is just a short-term little bump in the radar, but you don't got to worry about it. Then towards the end, I think it was November of 2021, if I'm not mistaken, the Fed came out and said that the inflation that we're facing is not transitory, so we need to start taking action in the near future, which doesn't really make sense, because if the Fed says in November of 2021 that inflation is not transitory and we need to start taking action to fight inflation, why did they not start it in November? Instead, they said we will start coming up with a plan of action so that way we can start fighting it in 2022. Then comes January of 2022, and that's when the Fed said, okay, inflation is significantly worse than expected, and we're going to start fighting inflation in the near future. Still strange. I mean, if it's that big of a deal, why are we not fighting it? These are the things that I kept talking about on my YouTube channel here. Then around March was when the Fed first finally started fighting inflation. And then in June of 2022, that was when the Fed finally said, okay, now we're going to get serious about inflation. Inflation is now in June, about 7 months after they admitted that inflation is not transitory. They started actually fighting inflation by raising interest rates by 75 basis points and by finally starting to sell off their balance sheet. Before June of 2022, the Fed was still printing money. The Fed was still growing their balance sheet. The Fed was still creating inflation until June of 2022, even though the Fed was saying before June 2022 that inflation is a big concern, that they want to start fighting inflation. But it wasn't until June that the Fed started actually fighting inflation by stopping to create more inflation. By inflation, I mean actual money printing. So that was kind of what the Fed said in regards to that. Now what they're saying in terms of the economy is that our economy is more facing issues, because if we now go back to what the Fed has been saying about the economy, they really haven't said much about the economy. Up until like about a few weeks ago, the Fed has only said that our economy is doing great. Our economy is stronger than ever. Our labor market is so strong. People are saving money more than ever. Like there's no reason anybody should have concerns about the economy, although we've been talking about it for a while now. But the Fed kept saying that, why would you have concerns about the economy? It's so strong, just open your eyes and look. Although people are struggling to pay for their gas, they're struggling to pay for their rent, they're struggling to buy a home, they're struggling to pay for their groceries. What could be wrong? And now what the Fed said was okay, yeah, we got to raise interest rates to fight inflation because inflation's so bad. And now this soft landing, which is what they were saying to bring the economy back down, is going to be, quote, very challenging. And they also said that a recession is possible. This is the first time that the Federal Reserve Bank has ever hinted at anything like that here in June of 2022. So you can kind of see the different tonnage over the months of what they've been doing. And we've already been seeing the effects of what the Fed has been doing, right? They've been raising interest rates to fight inflation. These higher interest rates affect especially speculative investments. They hurt speculative companies, growth companies. You've been seeing it across the tech sector. We've had layoffs and we've had hiring freezes across the tech sector. Look at cryptocurrency. We've seen some cryptos go bust because now as you pull money out of the economy, people want more sound, safer investments. And so that's caused some crypto brokerages to almost go bust. So look what happened to Celsius. They had to shut down the brokerage. People couldn't, still at the time we were recording, couldn't pull money out of Celsius because of what's been going on. And so it's been creating a lot of controversy there. Now, this is where I'm just give you a little bit of warning. I keep saying this, but just in case you haven't heard my previous warnings yet, if you invest in crypto, I like crypto. I believe in the future of crypto. Not all cryptos. I think there's a lot of crap coins out there, but I believe in the long-term value of the blockchain technology. If you believe in that, make sure you don't keep any of your currency on any exchange. Use an exchange as an exchange. Don't keep it as a wallet. Take your currency, move it off of an exchange, and know what you're investing in. Be a fundamental investor. Invest for the long term. I mean, if you really do believe in the value of cryptocurrency, price drops are a great time for you to buy. But again, I'm not telling you what to buy, just trying to get you to understand your own investment decisions. You have to be very confident in what you're investing in. If you're looking for a good brokerage, make sure you do your research because some brokerages probably will go bust. Because as interest rates go up, it's going to be harder for them to find money. And if they haven't been profitable, well, then they can go bust. And if you have crypto in any of these brokerages, well, then you would lose all the crypto. So this is where you want to make sure you do your own research. If you're looking for a good one, you can check out our sponsor, FTX US. FTX US is great because one, they let you dollar cost average very easily. Because if you wanted to buy Bitcoin or Ethereum, you just enter that and then you can pick your frequency. You want to buy it once a month, you want to buy it just once, you want to buy it once a week, you want to buy it every day. I buy crypto, Bitcoin, Ethereum, and a couple of the other smaller coins every single day. Now, again, crypto is just a small piece of my portfolio. It's a speculative part of my portfolio. I know how speculative it is, and if it all goes to zero, it's not really going to hurt me, so I understand how I invest my money. But the nice thing about FTX US on the business side is they haven't been doing layoffs. They've been actually helping out a lot of the other brokerages. They just paid like $250 million to BlockFi to help them out. They've been buying up other companies. They just made a huge investment in Robinhood. So they own a piece of Robinhood now. So that's why I like FTX US, and they have a bunch of different promotions going on. Like if you use my link down in the description, they'll also give you like $20. You have the option to win about $20 worth of crypto if you trade $150. So all you gotta do is enter the referral code minority if you use my link down in the description. So if you want to try out FTX, check out my link down in the description below. This brings me now to the gas market because clearly gas prices have been soaring. Now, the good news that we've been seeing over the last few days is oil prices have been coming down a little bit. This doesn't mean that they're going to be down forever. We don't know really where oil prices are going to be in the next 2 months, 3 months, 6 months. However, to help offset these higher gas prices, President Biden enacted a federal gas holiday. Now, this federal gas tax holiday. Now, this gas tax holiday essentially makes buying gas cheaper for people. And he also called on oil companies and corporations to not be greedy, to not use this as a time to make excessive profits, to be smart, think about the user. Now, in general, if you remove taxes, I think that's a great thing. Who wants to pay more taxes than they have to? The only concern, the thing that you want to be thinking about is the supply and demand side of oil. Because generally, I mean, when it comes to supply and demand, when the price of anything goes down, demand for it goes up. When home prices go down, people want more homes. Generally, when home prices go up, people generally want less homes. Like right now, home prices have been going up while mortgage rates have been going up. So now it's much more expensive to buy a home, which is why home demand has been falling. But on the gas side, we are facing kind of like a worldwide gas supply shortage. That's a big reason why oil prices have been skyrocketing. We're not taking as much oil from certain countries like we used to, which is causing this shortage. And so, the United States government has already released and been releasing their strategic oil reserves. We keep these oil reserves as a country just in case there's a crisis. So we have been releasing like 1 million barrels of that, or 1 million some a day of that. That way we can help lower gas prices. That helped initially, but then the supply shortage kept causing gas prices to go up. Now with the gas tax holiday, this is good. I mean, it makes gas cheaper. However, the concern would be what happens if demand goes up, because now people want to take advantage of the cheaper gas. Would that cause a deeper shortage in the supply of oil? So that's the thing that you want to be aware of. The real solution to any of these problems is to produce more, or to make less demand. And by less demand, I mean by having alternatives. I mean, if you want alternative energies, you don't want to be using fossil fuels, high gas prices is a great thing, because that means it's more incentive for people to go out and create green energies, which is what our presidential administration says that they wanted. So generally, high gas prices incentivizes people to go electric and to go towards alternative energies. So you kind of see that duality where, yeah, we want alternative energy, but we also don't want expensive gas. And at the same time, you have the whole issue with, what do gas and oil companies want? They're making big profits. They're also kind of facing the same dilemma where they are not incentivized to drill and produce more supply of oil because of kind of the rules and regulations that are around right now. They want to be able to produce. I mean, any company will want to be able to produce more product, but if they're at risk of government regulations slowing them down, that's gonna hurt their ability or interest to want to go and drill or produce more of their product, whether it's oil or anything else, because there's a big movement towards green energy. I think green energy is great, but I think we still rely on fossil fuels right now, and it's the reality of the time. So that's kind of the dilemma with what's going on with gas prices, and the thing that you want to be aware of, because if we do face a real supply shortage of oil and things with the war get worse, things with the economy get worse, that's not good news. And so that's something that you want to be aware of with everything going on. And generally, the last thing I'll say about that is when you see a slowdown in the economy, demand for oil does go down, because then businesses stop producing as much, people stop traveling as much, people stop flying as much, and that typically reduces the demand for oil. So that's the thing that you want to be aware of with all the things going on with gas prices and oil. And this brings me to 3, the broader economy. There's a lot of debate as to whether we're going into a recession or not. I really don't see how we can avoid a recession, if you want my personal opinions. I think that our economy is gonna get worse before it gets better, especially if the Fed stays true with their goal of fighting inflation. Because if they stay true with their goal of fighting inflation, they're pulling cash out of the economy, which means you're going to be slowing down the markets. People are going to be less interested in buying a home. People are less interested in buying a car. People are less interested in spending money, because when you're worried about a recession, you're less interested in doing that. Businesses are borrowing less money. That slows down markets, which causes things to slow down. And this isn't something that's just going to be fixed in 2 or 3 months or 6 months. It's going to take time. And you have to really pay attention to what the Fed does. I know I've been saying this for a while, but that's really going to be your indicator as to what's going to be happening in the next 6 months. Like if the Fed keeps raising interest rates for the next 6 months, you can expect the economy to slow down. It's just a factor of math. You're pulling cash out of the economy, you're making borrowing money more expensive, it slows down the economy, and that can trigger a recession. However, if the Fed then changes course sometime down the road and they say, okay, inflation is starting to cool down, even though it's nowhere near 2%. But if they make the claim inflation is starting to cool down, but now people are losing their jobs, the economy is slowing down, people aren't spending as much money, now we need to inflate, we need to stimulate, and they start printing money and start cutting interest rates, well, you make the root cause of the problem significantly bigger, because now you start printing more money, and that's where you can risk things like a currency crisis. You make inflation significantly worse, and then, yeah, you kick the can down the road a little bit longer, but the problem gets significantly bigger. So those are the things that you want to pay attention to. Of course, we're keeping you updated on Market Briefs, which is the free financial newsletter, which if you haven't joined yet, make sure you go to marketbriefs.com to join. Thank you for watching. If you enjoyed this video and you want to see the 9 money habits that keep so many people poor, I made a video covering that, and you can watch that video by clicking this button right over there. Thank you for watching, and as always, keep hustling. Like, most people don't want to talk about money, right? And the reason why it's such a taboo topic is because many of us are insecure about our money.